This video will provide a walkthrough to the solution for exercise 617, which focuses on estimating inventory using the gross profit method. Here's the data for our problem. Wormold Industries suffered a fire in its warehouse on March 4th, 2026. The warehouse was full of finished goods, and after reviewing the damage, management determined that inventory with a retail selling price of $90,000 was not damaged by the fire. For the period from January 1st to March 4th, 2026, the accounting record showed the company had purchases of $650,000, purchase returns of $16,000, and sales revenue of $955,000. The inventory balance on January 1st, 2026 was $257,000, and the company has historically earned a gross profit percentage of 35%. Our requirement is to use the gross profit method to determine the cost of the inventory damaged by the fire. So let's get down to business. We start our gross profit solution with opening inventory on January 1st, which was $275,000. Next, we would add any purchases and freight in and deduct any purchase returns. So our purchases are $650,000 and the purchase returns are $16,000. And since there's no additional information on any freight or transportation in costs, our purchases net of returns is $634,000. So when we add the beginning inventory plus net purchases, we end up with cost of goods available of $909,000. Now we have to determine the estimated cost of goods sold, which is going to be based on gross profit. In order to determine the gross profit, we need to know the sales. The sales are $955,000, and the company has an average gross profit of 35%. So from that, we will deduct $334,250 to give us an estimated cost of goods sold of $620,750. When we take our cost of goods available for sale and subtract the estimated cost of goods sold, this would give us our estimated inventory on March 4th, just before the fire, of $288,250. Now we're not quite done because this problem includes undamaged inventory. So what we have to do is deduct the cost of goods sold of the undamaged inventory. We're told that the undamaged goods has a retail value of $90,000, not a cost. And so from that, we must determine its cost, which would be 65%, or 1 minus the gross profit percentage of 35%. So 65% of $90,000 is $58,500. We deduct that from the estimated inventory to end up with an estimate of the inventory damaged by the fire of $229,750. And that's it.